Hello and welcome to Trading with Rob. I am Rob and this is the daily markup for the DAX on Monday the 23rd of September 2025. So today we have on the board sense a trading range open, a wedge top followed by a measured move down testing the yesterday's high, and then a pullback and a trading range into the close. Overall, the day was a doji day, a trading range day, with a large tail above and a large tail below. On the pot chart, we have the open of the day marked as the dashed green line. The close of the day is the dashed red line, and yesterday's high as the solid yellow line. Also have the 5-minute 20 period EMA as the solid blue line and the 60-minute 20 period EMA as the dashed blue line. So starting the day, we had a large gap up of about 106 points, and on the open there was a relatively large bear bar with a strong tail below it, followed by an inside bar, trading range price action, which makes for the day a strong trend either to the bull or bear sides, less likely, making a trading range day more likely. Initially, we have a consecutive wedges. The first wedge here and the second wedge here, which was in the third leg of the second wedge, followed by a series of very strong bull bars, which is relatively late in the bull leg. These are likely to be climactic and represent exhaustion rather than an acceleration of the trend. We then had a small lower high slash major trend reversal, followed by consecutive strong bull bars were probably strong enough for a second leg, and we did have a small second leg here, but then this makes for a second entry short, which has a higher probability than shorting the initial pullback. From this, we can generate a measured move target from using the open of the day to the high close of the day, and that is essentially doubling the range of the day up until this point. And we can see that we eventually hit this almost to the tick, so this was very highly respected by the market, and then had a small potential wedge, could either be drawn something like that or like that, 1, 2, 3, but strong bull bars, consecutive bear bars breaking below the 5-minute EMA as part of a 3-bar bear microchannel setup, so highly likely to lead to lower prices. And the first pullback is likely to be minor. We have a small pause here, and then again consecutive bear bars breaking below the 60-minute EMA, again making prices highly likely. Then had a reached yesterday's high, an area of support, as well as the measured move target, and we formed a micro wedge bottom and a small tight trading range at support after we had a very strong leg down in what could be potentially a trading range day. So it's reasonable to start expecting possibly a reversal. We've got big up, big down. Then 3 consecutive strong bull bars breaking above yesterday's high up towards the 5-minute EMA. They're relatively strong, not much overlap between the three bars, even if there is a strong, well, something of a tail above the third bar. We then have a pullback followed by a second pullback, which then formed a higher low double bottom. And this can be considered similar to this situation up here, just reversed. It's basically a major trend reversal at support, then a series of strong bull bars breaking above the 5-minute EMA, testing towards the 60-minute EMA, where there was a small pause in the market before forming a third leg up and a wedge. We then had consecutive bull bars breaking above the 60-minute EMA and testing the open of the day, where there was obviously sellers which formed this tail above, and then another double top followed by a small wedge testing again the 60-minute EMA, which is now support. Then we moved into a relatively wide trading range where there were plenty of double tops and double bottoms and wedges up to the upper third of the range and the lower third. So we were wanting to prioritize fading strong moves to those extremes of the range, particularly for fading the double tops and the double bottoms and the wedges. So looking at the best stop order trades for the day, once we have a wedge formed, it's reasonable to expect something of a reversal. This is quite a bit of trading range price action, so might expect a move down into the bottom of the range, but really we're looking for more of a scalp than a swing at this stage. When it doesn't work out or there's a micro double bottom, start looking for longs, maybe a bit further, bit more upward pressure, and consecutive strong late bars. Okay, probably to buy in the first one, but then want to avoid buying just in case we get a strong reversal back down. And then we have a lower high double top slash or major trend reversal as a possibility. Consecutive strong bear bars, so shorting below any of these bars, these strong bear bars, is reasonable, and that continues all the way down until we start to getting close to the yesterday's high. Now, as we are getting further in the move, want to be aware of what our targets below are, and in these late entries, probably just scalping rather than holding for a big move. Then at yesterday's high and the measured move, we have a bit of a bounce. After such a strong move down, probably want to wait for a second entry to make sure that or minimize the possibility of a strong second leg down. So after the first leg up, which probably up from the yesterday's high, which probably requires a second leg of its own, we then get our second entry on the second bounce from the yesterday's high, the support, and as consecutive strong bull bars form with follow through, it's reasonable to continue buying above each bar up until there's reason to reverse or get out, such as with this double top. But once it becomes clear that the market is not going to go much further below the 60-minute EMA, it's probably better to get out, maybe above this bull bar, and then start looking to buy and sell in the upper range, the extreme ranges of the trading range at the end of the day. Obviously looking to scalp rather than hold for a long period of time, especially given that we're so close to the close of the day. So overall, the full summary for the 23rd of September is here. If you have any questions or comments, please leave them below and I will do my best to get back to you. And thank you for watching.